Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're watching this because you got an email from me about it by being on my email list, or you're randomly seeing it on YouTube. If you're doing the latter, click the subscribe button and then that bell, and you'll get the next YouTube video because some interesting things happening in the markets. And I'm here today with a very special guest. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. How you doing today, Dave?
Give me a little bit. I was just telling Mike, I have this kind of bum knee from an old, playing football when I was a teenager, and I was doing something and it kind of gave out on me again. And so that's one reason I'm not in my, my bedroom office. I'm kind of in my living room because I kind of camp out on the couch during the day now until this gets a little better. But whatever, it could be worse. The markets are treating me pretty good in terms of, some of these. I was just telling Mike off air, I'll talk about it later, a gold position that it's up 8% today. And, like I said, I'm laid out a bit right now, but I'm still pretty excited about where I think the precious metals are headed and that sort of thing. So, and in a way, actually for my subscribers, we're doing this. I'm probably going to do a lot more of these things the next few weeks because being laid out, there's not much else to do other than, doing videos and podcasts and the whatnot,
Yeah, well, I'll be paying attention to that as you put the information out. Being a little banged up, you'll heal up in a couple of days. It won't be a big deal. But today, there are some people in the market that really got hit hard. And I don't know. I think could be worse for them than simply hurting their knee. And that is if they were on margin or had all their money on calls and Wells Fargo because it fell 6%. And what's interesting about it is it reported earnings today, and we're just into earnings season. And the XLF bank stock ETF, it was down over the past 2 days too. So I think we're starting to see some of the stocks that rallied into earnings or the sectors not really take off on the news, and they're kind of selling it. That doesn't mean the stock market's going to crash, but it's hard for me to be that excited about the market. At the moment, we've come back up to where it was on Labor Day, but in my view, it's gonna still go sideways to down, and it's more exciting to be in stocks like the one you talked about.
NFG.V is the ticker if you want to put that up.
Okay.
It's a newfound gold. So it's in Newfoundland, like the name you would think by the name.
Oh wow.
Yeah, this has done really well. We talked about it at 150 about right when it IPO'd. And they already had some amazing drill results. And I think the thing that's kind of interesting for maybe our subscribers and some of the other people out there is that Mike and I both own stock in a company called Nevada King, which is kind of a sister company of Newfound Gold that's run by the same guy, Colin Cattell, who also runs Palisade. And a lot of my subscribers also own Palisade. They did that in a placement as well. And that's what's interesting is probably at some point in the next 3 or 4 months, Nevada King will become trading. And then what ends up happening when these guys get a hot deal like that, he might get a premium in Nevada King because he's got this Newfound Gold at a $500 million market cap, has had some great, drill results. We'll have some big shareholders in Nevada King. So I'm pretty excited about Nevada King. I think it's going to end up being my largest holding when it IPOs because I already have quite a number of shares. I actually helped facilitate the sale of one of these one of these properties. It was a company called Meadow Bay, which is now Mountain Valley, which actually Mike and I both own through as well. It's kind of like a biotech company now. But anyhow, I helped sell the property in Meadow Bay to Nevada King because the property was in Nevada. It's a property called the Atlanta Mine. It's got a 1 million ounce resource. So I'm pretty excited about that. And look, these are the opportunities you get right now that I know we still want gold to go higher. We're still looking at the gold and silver price every day. But the thing about these mid-tier and junior type stocks is don't just look at the chart that you showed again that NFG, that when you're like, if they have good results, when NFG started trading was probably like $200 million market cap. Now I said it's like 500 million. They can move higher even if gold just stays at 1900 or 2000 or the whatnot. And that's what's exciting. Like it's fine to own Newmont and Barrick and the large caps, but they need higher gold prices. They need gold to go to 2,500 or higher to go higher. These juniors or small caps don't.
You don't know offhand the market cap for Newfound Gold, do you? One of the things that has happened that I've noticed is before, let's say, this spring. I mean, these small cap mining stocks and gold and silver itself had huge rallies this year in the summer and the springtime after the March drop in the markets. And a lot of these small cap stocks really took off. One that we've been in for over a year now and talked about a lot, it's Aftermath Silver. Well, that stock on the Canadian listing is close to $1. We both still own it. But when we first got in, it was like 6 cents and the market cap was like 5 million Canadian. And there are many stocks back then, before March, let's say, that had market caps of 5 to 10 million, these small cap junior type plays. And now that's really actually getting hard to find. And almost all of them got market caps of 15 to 20 million. And when they start trading, they're doing like this Newfound Gold one. They're starting really low and shooting up really fast. So I think that's an interesting stage we're in the market. It's not where it was last year. Now, if there's a stock that's cheap, it can surge so fast, you won't even believe it, just like that one did.
Yeah, I think that's kind of the adjustment we're seeing in the market, where the thing is too, when you've been in a sector that's been in a bear market for a long time, like gold and gold stocks were from 2011 to even though that they technically bottomed in early 2016, really the bear market lasted till about last year. Is that you get used to the bear market valuations. Like anyone who would, we've been in this bull market in stocks so long, people forget how cheap stocks were in 1982. But someone in 1982 would have been used to all these stocks trading at 8, 9, 10 times earnings, because that's what they had been doing for like 10 or 15 years. But so me and you being in the junior mining sector, we're used to these stocks kind of having $5, $10 million market caps, which is what, Aftermath had, the stock you just mentioned last summer when we did the placement in it. And now it's getting close to 100 million. Well, now because, the gold market is so much higher, there's more interest. You can make money in, mining at these levels. I think that's one of the major changes in the market, that these little juniors might start out at a $20 or $30 million market cap instead of 5 or 10. And then a lot of juniors as well, or a lot of companies have good results. Look, in bear markets, a lot of these companies would have good results. I think actually a perfect example of this is another company Mike and I bought a few years ago called Wallbridge Mining, which is almost $1 now. It's got a $740 million market cap. Well, I think that was 2016 that we participated, in the placement. And Wallbridge just had a little bit of an initial move from about 10 cents to 20 cents, 30 cents on those first drill results. But it was and then it consolidated before it moved higher again. But what I'm trying to say is Wallbridge back in 2017, 2018, when it was having great results, wasn't really taking off. You can see 2018, actually Wallbridge, even though it had good results in 2017, you can see that initial spike to 15 cents a share. It was back under 10 by 2018. And even in 2019, after that big surge to 30, 40, it was back, into the mid-teens. So it's really like this bull market sentiment that's now taken over, where I think these stocks can react. And like I said, I'm guilty. I still have a bit of that bear market mentality. When Mike and I do stock deals and we're looking to participate in these private placements, I'm thinking like, hey, what is this? This stock's got a $30 million market cap. And I guess see something like Newfound Gold, that thing IPO'd at, 150 million and now is, close to 500 million. So I think that's the big change. I know that there's an example you can see with Wallbridge, why it didn't really take off and why it has taken off in the last year is, and what's interesting is look at what gold was doing in early 2020. It broke out to over, to 1,600 an ounce. It was doing that before COVID really started to spread, all these problems in the economy. So it was almost like gold was sensitive.
Yeah, well, gold has been outperforming the stock market now since October 2018, and so have mining stocks. And what happened was that's the month that Jerome Powell, he was going into that month talking about raising interest rates and normalizing policy and being more aggressive to try to do that. And then he did a 180 degrees and made clear that no more rate hikes are coming. He didn't cut rates then, but he made clear he wasn't going to hike.
And if you remember, the economy was slowing.
Yeah.
Even before, like COVID obviously made it jump off a cliff, but or fall off the cliff, I guess you say. The economy was slowing even before that was going on.
Well, there's people now that they say it doesn't matter if the economy's slowing, you just have to buy things because the Fed's going to print more money. So thinking about that doesn't matter.
Some asset classes, that's truthful. I actually did an interesting bunch of research recently, and I was looking back, because we was, maybe, getting more into real estate, even though real estate in a lot of areas isn't cheap, because if inflation takes off, real estate would do well. And because so many people are so indebted, even if they just make real estate, stay flatline, right? In nominal terms, and it goes down in inflation adjusted terms, it keeps people having equity in their houses, still wanting to pay their mortgages and put them underwater. So, but what was interesting, this is going back to that study, was I looked at real estate from 1960 to 2000, and I didn't really look at the 2000s because that was the bubble. But what was interesting was the best decade in the 60s, 70s, 80s, and 90s, those 4 decades, was actually the 70s in terms of the percentage gain. And the 60s, 80s, and 90s all had good economies, and the 70s had a crap economy. Yeah. Yet that was the decade that real estate went up the most, and it was because of inflation. Because look at, you live in a house and you can see you got brick behind you. I got wood above me. It's like wood, cement, steel, copper, whatever you have in your house. In inflation, the prices of all that go up. So then the cost of building a house goes up. So then the price of a house, like the average house, will go up because someone might say, well, I kind of would like to build a new house, but these inflationary costs have gone up so much. I guess I'll just pay 20 or 30% more for this house that already is built because, I don't have to go and pay all these extra costs of building my own house. So, the input costs going up filter down. So I thought that was an interesting thing when I looked at that the decade that had the best percentage gains from 1960 to 2000 was the decade that had the worst economic performance, but it was also the decade that had the highest inflation.
Well, I'm just looking at right now. If I just go to Google News, these are the top stories at the moment on real estate. Ada County home prices in Idaho up 17%. Housing prices are held down in the big cities like New York, but they're climbing sharply in less crowded areas. Desperate home buyers are going to Idaho. Dallas, Fort Worth, prices are going up. California house prices, sales climbing. Prices aren't coming down. Red hot prices. And this is all despite, economic growth, this is the worst year of economic growth we've ever lived through. and anyone listening or watching to have. So is this a repeat of the 70s then?
itself. And I've talked about this in the past that about 20 years ago, 25 years ago, I read a book called Penturbia by Jack Lasinger. And what he talked about was exactly what those articles talk about, that at some point, the reason he called it pent is means five, right? Like five-sided, right? So he said there was four major shifts in real estate in American history. The first was obviously when the Pilgrims came over and the East Coast got, populated, and then the move to the West, and then the move into industrial centers, then the move to the suburbs, and then that's would be the move to the Penturbs, which are these small towns in places like Idaho or Iowa or Wyoming, or, they can still be in populated states like Texas, but these kind of small towns that are away from cities and the whatnot. And what COVID has done, due to the combination of people don't want to be locked up in little apartments, and then the crime and, the economy declining in these cities, and also lifestyle. Like, the reason you would live in Los Angeles or New York is to what? Go to restaurants, go to comedy clubs, go to, sporting events. You can't do any of that right now. And then who knows how much of that is going to be around, because a lot of these restaurants in a place like New York, where it's very expensive to operate, well, guess what's going to happen when a lot of things can only operate at 25% capacity for another 6 months? Probably a half or three quarters of these restaurants and businesses will fail, and they won't come back soon. So then that will kind of empty out the city. So just the economics combined again with the kind of social factors are causing this kind of movement there. So that's the interesting thing about real estate, that even if we're in a weak economy, I think you can see this on top of inflation, this two-pronged thing where that trend continues, where the big cities kind of continue to be weak and these small towns continue to do well. And then the demographics kind of state where the baby boomers getting old, and they're the largest part of the population. Even the millennials are getting into their, a lot of the millennials are in their 30s now. As people get older, you live in a small town. I live in an island. It's only got a population of 10,000 people. We're both in our 40s. You're just, at the stage I am in my life, I have really no interest in living in a city now, right? So that will also change all those things. And then again, with those small towns, look at it this way: if inflation does take off and it becomes more expensive to build, but a place like in Idaho or a small town and wherever, Wyoming, they don't have much supply on the market or many houses. So then people will probably push the prices of the current properties up even higher.
Definitely, that certainly seems to be what's happening. Well, as we wrap up in the final few moments, is there anything in the markets right now that have really got your attention?
I just want to see how the market more reacts. Like, it's obvious the market is not going to swoon big time into the election now. It's October, I think about 14th as we're speaking here today, right? And the election now is only roughly 3 weeks away. So it would take a hell of a decline to do that. We're almost at the highs. So I think more, how does it react after the election? And one thing I don't know is that there's going to be a lot of stimulus announced, regardless of who wins, right? And the question is, does the market have another run up? Because what I think is going to happen is ultimately is when the stimulus runs out, because the government debt levels are so stretched, probably in 2022, 2023, we will be in a big bear market by then. But the question is, does the market kind of have another move higher, thinking, oh, great, all this stimulus will help the economy? Or does it kind of start to just roll over now because it's exhausted itself? Because, you saw Wells Fargo there. Those bank stocks look really bad. And it's going to be tough for banks to make money in this low interest rate environment. So do we kind of roll over after the election, or does the stimulus kind of hold it up? That's what will be interesting to see. I think either way, gold would do fine, because once that stimulus is announced, regardless of what the markets, the equity markets do, the gold and precious metals markets are going to see more money printing, more government spending, et cetera. And let's say the worst case scenario in the election is like Trump wins or something slightly on election day, but then now there's, the mail-in ballots and there's a fight. and it becomes like 2000 and no one knows what's going on, well, that uncertainty would be good for gold too, right? So I think either way, I hate to be like that, like, oh, whatever happens is positive for gold. But I think that gold is kind of in this consolidation and has been. And I recommended my subscribers this past summer that you take 20 or 25% of your gold stocks off the table till the fall. And probably within the next month or so, I'll be reallocating some of those positions. But I think that, once now, because now we have this uncertainty over, again, the next round of stimulus or bailouts or whatever we want to call them, once that certainty is back in and we see kind of the spending and printing mode back on, gold and precious metals can do well. And like we just showed you, these little mid-tiers and juniors are still pretty cheap, and they can probably move a lot higher if there is this next move higher.
Well, the thing is about gold, I think you're absolutely correct. Gold, almost no matter what happens in the short term, is in a bullish environment. But what would change that is if the Federal Reserve began to raise interest rates. The gold explosion of outperforming the stock market began in October 2018, when it was clear they weren't going to raise rates ever again for a very long time.
Yeah.
And we're still in that phase. So I think gold's going to be positive for years until they are able to raise rates. And, that's inconceivable right now, but there will be a day when they do it, so.
Well, the thing that's kind of funny about that, again, getting back to the raising rates factor that you just mentioned, was I guess they had one of these meetings that, a month or two ago, the Fed, and one of the things that, they talked, for some reason, some rumor came out there was like, they could raise rates by the end of the year. And then Powell said, that wasn't going to happen anytime soon. And a friend of mine called me and said that. He said, oh yeah, the Fed's not going to raise rates. And I'm like, what? They're not going to raise rates for the next 10 years, because, and if you look at it after the financial crisis, that was 2008, basically, when they cut rates to zero, and they didn't raise rates till 2015, which was 7 years later. And then they didn't really raise them multiple times till 2018.
That's right.
Right? So, which was basically 10 years later. So I think, if we look at rates going zero, basically in the first quarter of this year, we're not going to see them, that long-term rates can go up if there's too much government debt and investors get sick of the government spending money. But short-term rates, like the Fed funds rate, that's not being raised for 10 years, in my opinion. So maybe even the next decade, maybe 2030.
Well, thanks for taking the time to talk to me and everyone else out there. And everyone out there, go to your website, addictedtoprofits.net, and then get more information from you. What do you have available on there?
You know what? I think more than the newsletter right now. I'm like I said, I haven't been that active because Mike and I do these. We work with companies, and I've been raising some money and doing some other deals. And I got a new book coming out early next year, and I was finishing the book. But so I have a newsletter that's got weekly updates and stock portfolio and all this sort of thing. But I think more than anything, if you just sign up, the access that we have to these private placements, to these deals, I actually think that's the best thing right now. Like, one reason I'm not as active in the newsletter is because I rather, invest in these deals. And see, when I'm doing it, I have to help people, like, with the forms and send the money to the companies, all this kind of crap, right? Because a lot of people have never done it before. And so I'm actually more, interested in that. And again, we can give you access to that. We showed Wallbridge. Wallbridge went from not every deal is going to do this, but Wallbridge went from 8 cents to $1. Aftermath went from 8 cents to $1. We've had others, Glandy, which wasn't a private placement, it's gone from 5 cents to about 25 cents. So, like, we have access to these kind of deals, and they can do, like, real well. Like, there's another one, Vendetta, that Mike and I have done some work for, and also participated in the private placement. And Vendetta's gone from 4 to 7 cents, almost a double. So these are the kind of things that you can have access to, and the kind of things that I'm kind of interested in. Like, like I said, Nevada King, which we both own, I think will do really well out of the gate.
Definitely, it's going to be exciting times for sure in these stocks.
Yeah, for sure. Thanks.
Thanks for talking to me, and we'll talk with you soon.
Yeah, thanks for having me.